everyone. Wish you a very good morning. So today's topic is bank payment obligation. We call it short in BPO. So the BPO ushered a new era in trade finance in terms of the offering that this particular framework gives to the exporter and importer. And in the trade finance world, it is a new way of doing business. You can say it's a more of a matchmaking way of doing a business using a trade finance platform. So my agenda for today will be like this. I will touch down these points on this particular topic, and I will give you the full freedom to ask any questions at any point of time. Like there is no such provision so to stop at the last moment and asking the question. You can ask any questions at any point of time if you have any doubt on this topic. So I will start with this concept of BPO. Have anyone have heard about this concept? What is BPO? What is the bank payment obligation? Have any idea about it? The concept actually was there when we have called documentary collection, avalization. Such kind of concepts are already present in the trade finance world. But if you say the BPO in purest form, it was started officially started almost decades ago. In 2013, officially this BPO framework have started into the trade finance world. I will tell you how it works and what is BPO. So BPO, as you all know, that is bank payment obligation. It is just a framework. So framework means it is not a rule, not any such hard and fast process that need to be followed. It is just a framework which a particular group of exporter and importer may follow, and it is endorsed by, as Metusa told, International Chamber of Commerce or ICC, also by SWIFT. So in BPO, both the exporter and importer, or you can say the sellers and the buyers, have the advantages to have an assurance like letter of credit. So letter of credit is a traditional product of trade finance. It has been used since almost we know around say 100 or 200 years ago. This letter of credit concept was there, but that this is one of the traditional products of trade finance where the exporter and buyer both are secure to do the business. They have some sort of cushion in terms of the assurance for payment and also in terms of the document that they are receiving to claim the title of the goods. So in BPO, it is almost give the similar assurance like a letter of credit, but it has a simplicity of just a cash against good. Like suppose you go to any grocery shop and you ask for a good and then you make the payment. So there is a concept called open account trading. So open account trading, they say you give me the goods first and the documents for the goods so that I can take the ownership of the goods, and then based on the tenor or say the business cycle, I will make the payment to you. Suppose I have a certain amount of good, I have to sell them, and then based on my business cycle, I get the money out of the business, and then I can make the payment for the business. So that is most like a cash against goods or the open account trading, you can say. BPO comes in middle ground between this the LC and the open account trading, and for that reason, it is very simple. The simplicity actually saves up the time and cost, and there is no need of physical verification of documents. The physical verification of documents is one of the most tedious work that bankers or the respective exporter, importer, corporate houses they do to prepare the document, to dispatch the document, to verify the document. That is a huge amount of time and effort is spent for this type of physical verification of documents, and it's a very risky affair because it's a human job to verify the documents against the specific guidelines, and then there are chances of having human error, and there are chances of having there is a mismatch of from the documents with the specification given earlier in terms of LCs and collections. So there are a lot of chances so that we have a problem like at some point of time when we deal with such kind of documents like physical verification of documents. So BPO actually eliminates this work. The physical verification of documents part is actually eliminated by BPO, and this part actually being taken care by system. I mean some automatic electronic matchmaking system who is called TSU or Trade Service Utility. So this matchmaking system, they can actually verify the agreement between the buyers and seller and specify the specific condition for the goods and services. And then the data which the exporter sends for those specific goods and services, they can verify and match those data and pass it on if it is successfully matched. So if you ask what is BPO, in a nutshell, I will say it is a irrevocable undertaking given by a obligor bank. Obligor bank is typically the buyer's bank to a recipient bank, which is a seller's bank, to pay a specified sum of amount of money on a agreed period of time or agreed date under the condition of successful electronic matching of data by TSU is a platform which actually follows the guidelines given by the ICC. ICC actually given some guidelines. They have a book called BPO. In that book, they have given the guidelines how this sort of matchmaking should happen, what are the conditions, and what the bank should follow the practices. So based on those guidelines, this TSU platform has been, they are actually doing this matchmaking process, the successfully matching process, and then they are passing those information to the level that if it is passed, then they will instruct the respective party to pay the amount. If it is not passed, the respective party should stop pay the amount, and it will be termed as rejected. So this TSU makes TSU is actually very important part of BPO. TSU is basically, a platform. You have heard all about Swift, right? The Swift platform. Swift actually is a company who are providing these TSU services. So these TSU services can be owned by a bank or can be a third party. So this service is providing this centralized matching services so that information which is supplied by the supplier's bank verified against the agreement which already present between the supplier and the buyer, and those agreement details has to be fed to this TSU application or TSU platform so that they can verify those internal agreements and the specifications for the goods and services against the information supplied by the exporter. And then it's basically a data comparison happens between the platform which actually checks the underlying agreements and then verify the documents, not documents, but the data within the documents which is being supplied by the exporter. So here, no sort of physical documents are being sent, neither electronic documents are being sent. These are the information sent by the supplier based on the documents that they have, and the verification happens based on the information shared by the suppliers only with the respective agreement that they have. So basically, this is the idea of a BPO. It actually nullifies the need of a manual verification of the physical document. Physical document did exist in reality, which is actually required to claim the ownership of the goods. The respective transport authority say that we have a bill of lading to claim the goods from the port, or the airway bill to claim the goods from the respective airport authority. So those document does exist. But for BPO to happen at the initial level, when this data comparison happens, we do not need the physical document. We need only that information from those documents. If information is passed, if information given by the exporter is successfully passed by those TSU application or platform, then this document can be manually sent by the exporter to the respective buyer. So buyer will not get the document unless this particular TSU services giving the successful comparison, successful matchmaking between the documents and the underlying agreement. So that's why both the buyer and supplier are safe in that way, because supplier is not sending the original documents to the buyer unless they get the information or intimation by the TSU services that the information has been successfully matched. So it is a more of a safe way of doing business, more like an LC, but it doesn't have the complication of a letter of credit. It's more simple than letter of credit. We'll go to the next page. So I told you how it happens, how the BPO process takes place. I have given the explanation here as that step by step how the process occurs. It is not so complicated. It is quite simple. As I told you initially, the seller and buyer, that the contractual agreement happens. That is the first step. And seller wants that the payment to be on a certain specific period, which has been mentioned into that respective seller or buyer agreement. Now to offer the payment assurance to the supplier, buyer instruct their bankers, basically the obligor bank, to establish a BPO, more like a LC. When the LC is being issued, buyer have to instruct their bankers or the banks to issue an LC on behalf of the suppliers. Similarly, here also they are issuing an BPO undertaking to the seller, saying that seller need to provide a certain information in order to obtain the payment. And when the obligor bank agrees to support the transaction and issue the BPO to the seller bank receives this and notifies the BPO to the seller, like we have received the BPO from the buyer. And at the same time, it offers assurance to the seller that in case they need some funding or financing, because it's already an irrevocable agreement from the buyer's bank, because they are giving a BPO kind of undertaking. So it means that if certain information has been provided in a certain manner within a specific period of time, then payment should be made by the buyer's bank. There will be no delay on the payments. Based on the assurance given by the buyer's bank, the seller's bank can also offer some finances to the seller, of course, like pre-shipment or post-shipment finances, supply chain finances, all are actually possible under this BPO framework. And then after the shipment of the goods, seller provides the data required under the BPO. So basically, BPO is contract basically is a kind of undertaking which tells, give me those information on a specific period, I will pay you the money. So seller has to prepare those documents and send those information to the buyer's bank. I mean, not the buyer's bank, to the TSU platform. Basically, it's not the buyer's bank they are sending it. It's TSU platform is actually well connected between the buyer's bank and the seller's bank. That it could be a third-party provider, or it could be an internal arrangement between the buyer and the seller's bank. It could be a common platform where they are exchanging the information. So based on the information provided, so the TSU platform gives a nod whether the information is matched or not matched. And if it is matched, then the further process follows, as like the supplier sends all the information, all the documents to the buyer's bank, and buyer's bank receives the documents, and then accordingly, as far as the information provided by the TSU platform, because because they will provide information to the buyer's bank and seller's bank both, saying that this particular information has matched with the underlying agreements, and based on that agreement, we are supposed to make you the payment on such date. It could be on site basis, it could be on usance basis. Basically, it could be after a period of time, it could be immediately, it could be in many ways. So that's how. Like here, there is no manual physical verification of the documents happening within the banks. The documents directly shift from one bank to another bank. Once this TSU platform gives the nod, they are giving the successful matching intimation to the respective banks. I mean, both the banks basically. So they also have a buyer's undertaking to make the payment on a certain date in future based on the payment is being made. So this is how this BPO framework happens. I will show you an entire picture of the BPO, how it happens, the entire story of BPO, the BPO flows for the documents and the goods and the data. So if you see here, we have that step 1, step 2, step 3, like that. So as we see, there's a purchase order. Purchase order basically is kind of a order like which buyers and supplier, they actually initially agreed upon such things, that they want to get certain goods on a certain such price and on certain such Incoterms and such rate, everything. So all these things are actually mentioned under the buyer and suppliers agreement, and this agreement is actually being sent by the buyer to the buyer's bank, buyer's BPO obligor bank, you can say, to issue the BPO, and the BPO is being issued to the supplier's bank or the recipient bank, and recipient bank in turns inform the seller that the BPO has been issued. And in the middle, I mean, they are actually, once they have received the BPO, they also came to know what are the terms and conditions under that specific BPO issued to them, and they prepared those goods and documents and dispatch those goods and documents to prepare those documents so that the information can be sent to the buyer's bank, to the TSU unit, and then TSU unit decide the document, the information based on those documents, whether it is matching the underlying agreements or not. And those information, once they are matched, they are the deciding factor whether the payment can be made on the due date or not. In case it is not matched, it is a straightforward rejection. So here there is no chance of negotiation or any chance of putting the discrepant documents in a way, and the further negotiation is possible, because it is totally done under electronic mode in a matchmaking process. So there is no way to find out like which are the discrepancies and then what can be negotiated and all. It is just straightforward rejection, and once the rejection happens, then there is clear-cut indication that no money will be provided for this set of information. But in case it is accepted, so that information will go to the seller's bank as well as the buyer's bank from the TSA unit, that on a certain date the payment will be made and the document information has been found to be compliant. And as you can see here that then the invoice and the documents are being shipped to the buyer's bank or the buyer party directly, so that they can take the ownership of the goods. So here we can see that the movement of documents are not happening through the banks. It's happening directly between the party, whereas the movement of the fund is only happening through the bank. So the bank's responsibility is much more limited here. They are not taking the end-to-end responsibility to handle the goods and the documents and and the data as well. So only the data and the payments are being exchanged between the banks and basically to the TSU units, and the documents is being transferred between the two parties directly. So that is how it is being kept to make the complication out of the picture, which is more complicated in case of a letter of credit. So do you have any questions here? So I'll go to the next point. So there is a huge popularity for the BPO framework in the beginning of 2013, 2014, that and like till 16, 8, 17, 18, that time BPO is supposed to become very popular, and then people all are talking about BPO, and BPO this framework also, it's something which make revolutionize the trade finance business. But somehow it did not pick up that much. But what I'm talking here is the initial years when the BPO becomes so popular. If you look at for last say 3, 4, like the post-COVID era, you will see the popularity BPO has is actually gone down rather than going up. But it's not like it's a failed process or something, like a framework doesn't work that well. It worked well at some part of the world. Even in today's world, ICC believes that it's a framework which is actually making the business more simple. So why it has become so popular, even though it is just came into existence only a decade before, in 2013, it has been officially announced by ICC. The reason is the win-win situation between the buyer and seller. So in this framework, both buyer and seller are secure. You know why seller is secure? Because buyer is giving the assurance for the payment if the information is matched. So seller is not sending any documents to the buyer unless they are getting the intimation that the information that they have provided is matched by the TSU application. So they are secure. They are not sending anything from their side unless they get the intimation that the information they have provided to the TSU is actually passed. For the buyer, there is also a security. The security for the buyer is that they get the information in hand before itself, and so that they into the position that they know that the goods that they are receiving or the documents that they are receiving will be free of discrepancy. So in trade finance world, there is a lot of amount of effort and time being spent on the solving discrepancies, and there are a lot of disputes, and they have a lot of negotiations going on for that reason, which actually kills a lot of time for the buyer. So here buyer also saving their lot of time because they are not directly going into this negotiation with the seller. I mean, when seller sends discrepant document, ultimately there is a lot of negotiations going on there. But in this situation, it is either fail or pass. There is no such negotiation is going on under BPO, which is one way good and one way also have some disadvantages also as well. And then the second point is that end-to-end automation is possible in this case. Like the data has to be prepared by seller, and the seller has to give the data to the respective bankers, their recipient bankers. From that point till the point of physical for the point of matching of the documents, matching of the information based on the underlying agreements by the TSU, and sending the information to the buyers and suppliers bank. Everything is like an automatic process. Everything can be automated actually, because there is no human intervention required here. No need to manually check the documents. No need to verify anything which is the underlying conditions is met or not. Everything is electronically defined within the TSU application. This can be done transaction wise or as an umbrella for multiple transactions as well, so that all the transactions comes to TSU applications. That can be done without any manual intervention, and which actually results in significant reduction of turnaround time, because there is no manual intervention required here. Next part is a scalable solution. This solution can be scalable to a level that all such type of transactions covered under a specific type of agreement or a specific type of initial underlying conditions, so that it doesn't really need to have every document to be treated as a separate document and every document to be scanned separately, verified separately manually and all these things. It could be a scalable solution for multiple transactions at the same time. Being a large volume data or a large amount of transaction doesn't matter here actually that much, because this process is kind of straightforward, and there are no human intervention, so there is no chance of human error, and the conditions are kind of defined by ICC, that what sort of information can be verified. So there is no such a dispute as well. Also, the dispute are actually part of a trade finance world. It's a huge time-taking process and a lot of negotiation skills required. Sometimes it takes years to solve a matter, and then these electronic matchmaking standards are kind of standardized for both buyer and seller, because these are governed by ICC laws. So here either pass or fail. These two options are possible, and not much negotiations are actually is possible in this scenario. So basically, this is the points for which ICC actually promoted BPO at some point of time in the last decade, and it became very popular. It's like within the span of say 5-6 years from inception, it becomes very popular, and also it actually encompasses blockchain technology at that point of time, which was also popular. And to be a part of it, people have started thinking blockchain and BPO could be a combination of a platform or of a solution which provide a lot of benefit to the trade world. Many big banks actually joined that bandwagon. Unfortunately, this entire BPO success story that did not pick up that much by beginning of this decade and post-COVID era. But it's even still today, ICC actually promoting BPO as a successful product, and they are telling it's a very solid solution in terms of handling multiple transactions or huge amount of transactions, huge volume of transactions within a seamless manner. I just touched on these ICC guidelines on BPO. So as I already told, ICC have a publication called EUR BPO, Uniform Rules for Bank Payment Obligation, publication number 750. These are the rules adopted in April 2013 at the Banking Commission meeting by the ICC, and the basic reason for this set of rules is to give a framework for the buyers and sellers, so that BPO framework can actually based on the underlying trade transaction which happens between the buyer and seller. It's actually the underlying agreement which happens between the buyer and seller that is the basis for a BPO. So that actually creates the BPO, and BPO emphasis on those underlying agreements between the buyer and seller. So that is the set of rules which govern those frameworks. So it also emphasizes on the having an agreement from the applicable banks to participate in such a transaction, with confirmation that each bank will use the same technology platform. It is very important that the platform should be a common platform. It cannot be multiple platform used by different banks. So once two banks decided to come under BPO, they have to have a common platform, which would be the matchmaking platform for them. It also it's being defined as a trade matching application in the UR BPO, but also it's called TSU in general terms. So TSU is a unit of the platform, and trade matching application is also referring to the same platform. So more or less, it is actually catering its services to the different banks, and then the banks are also having they have their own internally developed platform as a common platform between 2-3 banks, and it's kind of a private channel where they use this particular platform. Different banks, initially some few banks have started such channels, but at this moment, TSU services being provided by Swift. Swift is one of the platform they're giving TSU services, the matchmaking transaction process. Yeah. So as ICC guidelines are there, so it's mentioned that unless otherwise always stated, the BPO will be subject to the latest version of the your BPO, and the rule can be supported by the use of state standard messages, which is called. So this is a specific standard message defined in your BPO. So these are called International Standard Organization ISO, which certify ISO 20022 Trade Services Management TSMT messages. These are standard messages for your BPO, and use of any other message will invalidate those messages being part of BPO. So these are the messages, TSMT messages are being used. They are being guidelined by the your BPO publication, so that every bank should use such kind of messages to do the data comparison. I will share those information about those messages, how it looks like and all here. So data fields for your BPO, which bank will expect to verify, are those below fields: like the transaction reference, PO reference, the buyer name, supplier name, all this data actually, the goods name, goods amount, quantity. These are the information which need to be verified with the underlying agreements under the BPO through the TSU platform, and there is a publication, as I already told. And these particular TSM2 messages are actually kind of XML messages that we have seen for even Swift. I can show you. I have attached one message for that. I mean, that I can open it from here. Okay, at the end of the this topic, I will show you this message, how it looks like. It's a more of XML message, and it have all the information in it, which needs for the verification of those standards, like the matching standards here. Any questions till now?
No,
Okay,
Sandip.
I will go to the next point. So the next slide is about the advantages and disadvantages. So BPO, as we already I have discussed with you, is a very secure payment method because it is done by the electronic matchmaking process, and there is no such way that anything can go wrong here. Everything is defined under the ICC BPO publication. So all the information given by the suppliers bank need to be exactly matched with the with the underlying agreement, which initially happened between the buyer and seller. They have to verify what type of document, what type of conditions, what are the different varieties, everything they have to be exactly matched with the information provided by the supplier. So there is no way of having any mismatch here, and the payment is also secured because it is an underlying irrevocable agreement undertaking, basically from the obligor bank or the buyer's bank. So obligor bank, once they have given the irrevocable undertaking, they have to they cannot take backtrack from that. Also, it is faster and cheaper in terms of once the specific platform is being built, there is initial cost in the building this such kind of platform or taking the subscription of those platform. But once it is in place, the overall thing is very fast and very cheap compared to other traditional trade settlement products like LCs or collections, because it is as fast as like in a single day they will know. I mean, in a few hours from sending the information, they will be able to know whether they are receiving the payments or not, and that is really fast in comparison to any other traditional product. Also, there is a better control over goods by the exporter until payment is agreed. As I already told you, until unless the payment is agreed, the matchmaking is done, it is successful, and it is being intimated to the respective supplier's bank. There is no need to send the document to the buyer's bank, buyer's party or the bank, whatever it is. Like bank will not take any responsibility for the document. They can just pass the document to the buyer, or they can directly send to the buyer those documents. So there is no such responsibility from the exporter until unless they get the matchmaking done in a successful manner. And also, it facilitates easier access to finance. So either in pre-shipment or post-shipment finance, this BPO agreement itself, the BPO undertaking itself, actually gives a kind of a cushion for them to get a finance from the other banks, being a supplier bank or any other banks. This BPO undertaking gives that the cushion that if the information is being sent successfully, a payment will be done, payment will be made. So it's actually gives a lot of help for the exporter who are actually having lack of funds in the beginning or liquidity issues. So BPO helps to solve the liquidity issues as well. The minimal manual intervention and the maximization operational efficiency is also is actually a good part of BPO, because BPO helps us to gain both that side of minimal intervention from the manual errors, and there is no chance for manual error as such until unless the information provided by supplier is discrepant or is incomplete. Otherwise, from the bank's perspective, there is no intervention from the bank need to be done on those because it's like a channel. Once they feed the data to the respective platform, the platform takes care of everything, and it actually maximizes operational efficiency, because banks will need not to wait for a longer period of time to understand their documents they have received is discrepant or clean, and whether payment can be made or not. Such kind of hiccups are not there anymore. So it actually adds up to the operational efficiency. And as already it is a undertaking given by the BPO BPO issuing bank. So there is very low chance of payment default because it's a bank undertaking. So of course, if the terms and conditions being made, the payment will happen, and there is any kind of trade disputes as well. Very less chance of having trade disputes as well, because already governed by ICC rules, and it is being specific about the information. There is nothing, very hypothetical or any such scenario arises here. Why? Because the information is very specific in the ICC guidelines, and if that is met, there is no chance of denying the payment. It has to be made. There are a few disadvantages, but these advantages actually later on found to be more powerful than the advantages, because BPO has not taken as fast as initially being thought. It was initially one of the most revolutionizing product in the trade finance market, but it did not work that well. So the major reason is that the chances of non-compliance or fraud is actually present for the electronic data verification, because if somebody is doing under invoicing or over invoicing or any kind of any error related to compliance, electronic data verification is not capable of finding those kind of gaps. Actually, that is the main reason. Chances of any such compliance hit may happen when, even after that, the transaction being successfully matched and the payment has been agreed, at later point of time there is a chance of non-compliance as well. And it was not very convincing as well, because generally for the buyer's perspective, they are agreeing for the payment based on the information received, not based on the actual document received. So it is kind of for the banks, it becomes a little bit difficult to convince the buyers, saying it is more convenient than the traditional products, because in traditional products the banks are dealing with the document, which is actually the title of ownership of the goods, whereas in BPO there is no title as such. It is just the information sent by the supplier's bank, and then if it is matched, it is matched. Then nobody can deny up the payment. But there is a gap, because if anything, the in transit, the documents being lost, document being theft, anything happened, that responsibility actually cannot be covered from the buyer's perspective. That's always a chance for the buyer to think about twice to take up the BPO as a trade settlement method. So that is the disadvantages for BPO. Then I'll go to the next point, which is the present global trends. So we have taken the trends for the last 8 decades just to see that how the LC settlements and the non-LC settlements are actually happening throughout the last 8 decades. So as you know, the LC or the collections, those are mostly called the traditional way of having the trade settlement. But it has been found that over a period of time, the traditional method of trade settlements are actually going, the volume is going lower and lower and lower. The reason behind it that there are many complications, as well as the time taken, as well as the fees to be paid by the respective parties, all are a bit high here. Even though the risk is mitigated, but the complications in terms of time taken, in terms of verification of documents and disputes, even though disputes are covered, because the risk is very much covered under the LC framework, but it is comparatively slower than the non-LC, which there are high risk or low risk for the buyers and suppliers. But those are much more faster, much more convenient for them. If they have a strong trade relation between the parties, like exporter and buyer knows them very well, they don't rely on those expensive instruments, trade instruments like LCs and collections. These are actually expensive in terms of the fees provided to the bank, and then time and the complications in terms of the document to be verified based on the conditions. At sometimes it becomes a kind of a bottleneck for the transaction to be passed. So we see there is steep decline of the LC transactions over a period of 8 decades, and these non-LC transactions are mostly comprises of open account and advanced payment type of trade settlements, where either buyer is paying upon receipt of the goods, so basically which is open account trading, or buyer is paying in advance and the goods has been received later at a certain period of time, so they can claim the goods at a certain period of time. So that is how it is happening. So actually being seen that the way of handling transaction to the open account and advanced payment trade settlement opens the door for BPO as well, because BPO is more supportive towards those type of trade settlements, because it is not lengthy, it is not having the physical verification of documents, more like those type of payments. Those type of payments are basically the transaction of funds between the parties and the respective invoices, based on the respective invoices and due dates, and the documents actually not moving through the banks, it can move to right in the parties. So same happening in the BPO as well. So this trends actually also very exciting factor for BPO, because BPO, even though it is started just a decade ago, this particular patterns encourages BPO kind of a trade settlement method in a way that it can flourish, and it did flourish at a point of time. But the recent trends are not so much encouraging, but this is how the growth trend was there for the trade finance business. The current market trend reflects that the major volume of open account and advanced payment business are getting converted to BPO, as I told already, in order to minimize risk, because the BPO is a kind of framework where both the buyer and supplier can minimize their risk, which in open account it is more imperative for the buyer side, like buyer having had minimized risk, and the advanced payment the seller has minimized risk, but BPO can minimize risk for both the parties. So it is kind of middle ground for them. Then the B2B and B2C companies are also the potential clients for move to BPO framework, because they have that trust factor sometimes, and because both are the big corporates, sometimes bank to bank, bank to company, and then they have that kind of a some middle platform where they can be assured that all the terms and conditions being fulfilled, because they need to be they cannot do business on trust, mainly on trust. They have to have some sort of platform in the middle which can tell them that okay, the terms and conditions are being actually met and they are free from any risk. So this is also a kind of a potential client scenario for the BPO framework, where these companies are actually very much eager to take part in this type of state framework. And as BPO exists in its own, it's actually kind of a platform given to the cross-border parties. Basically, any party can use BPO, the common ground platform, and it provides the finance opportunities for both the buyers and suppliers, because it is backed by the irrevocable undertaking by the respective banks. And as far as like early this decade, we have seen that around 55 banks have actually taken BPO as a trade finance solution at their end. Even many corporate houses globally have investment BPO solutions. You can see few names here. Those few banks and the corporate houses, they actually invested a lot on the BPO kind of solution, and I think few of them are still using BPO platform on their own. Like they are kind of either subscribed to it, or they have their own channels. Some sort of consortium they have made, and they have used their own channels for BPO in between them. And the next slide is about the future opportunities and the challenges. So as you know, as I already told you about the BPO functionality, the framework, there is a payment certainty, and there is a chances of financing and information flow, of course, and the risk mitigation. These are the basic, the good qualities that BPO framework has, and these qualities actually attract a lot of clients, banks to embark on the BPO journey in future. So it has a very bright it expected to have a very bright future. Even now, we feel that it is a strong framework, but in case of some hesitation is going around between the parties and banks, because there is no actual ownership of goods, because the documents are not being transferred during the process. So the first I talked about the opportunities, why BPO can be seen as a torchbearer of a trade finance payment settlement method in future. So it supports fair trade. It helps to secure better commercial terms, of course, commercial terms in terms of agreement that they have between the buyer and seller. First ownership, in terms of that, there is no need to send documents to the bank in terms of verify the documents to both the banks, the buyer's bank and the seller's bank, and then go for further negotiation. I think that part is totally missing in BPO. BPO talks in terms of the information that being shared between the banks, and then it is getting verified immediately through the PSU platform. And this platform is very fast actually. It's like it can give you the information within a few hours, where generally the documentation and the verification part goes for a few weeks, even not months, if not months. And then it's flexible, and like it's a scalable solution basically. So we can make it based on the volume. I mean, it can be scalable based on the volume, transaction, number of clients. All can be supported through a same BPO platform. Since it's an automated one, and then there's no manual intervention is required for each client separately. We need to only have the underlying business agreement and the terms and conditions to be fed for the respective PSU platform. And multiple clients can have their own set of rules set under the same platform. And this platform can actually work for multiple clients within the same banks, or multiple clients in the multiple banks with the respective set of rules and the conditions. And there is no such hard and fast rules are being given for BPO. This is a framework, as I told you, set of rules. These are just guidelines. So if they want to mitigate risk in a much shorter way, then they can have a lesser amount of information, which can be a guiding factor for the banks to have the lesser amount of terms and conditions in the agreement, or they can have more information so that they can have a lot of terms and conditions on the agreement. So it can be scalable, and also based on the customer to customer, we can customize it as well. And also first identification of discrepancies are there for importer, because importer will know this is a good set of documents we are getting it, or some sort of problem is there sign the document, and in case they have a rejection from the TSU, it is straightforward rejection. So they can know about the discrepancy in the beginning itself. So later on, if something happens, whether through BPO or through any other mode of trade settlement method, so they will be aware of these particular discrepancies. For the supplier, it's like, is there access to supplier financing? This is a very important part, because financing is a big part of the supplier's journey to procure the goods, the raw materials, prepare the goods, and to ship the goods. So everywhere they have the requirement of finances, like pre or post shipment finances. So this actually, this sort of a financing process was actually encouraged by BPO. BPO framework gives a lot of impetus for the supplier's bank, so that they can offer the finance facility to the supplier in terms of the pre-shipment, post-shipment, supply chain finance, what kind of finance they have requirement, and the timely payment. Of course, it's automatic process, and then matchmaking and the intimation of the matchmaking, successful matchmaking, and as well as the payment intimation happens immediately. So there is no way of a delay in payment. It's not a manual intervention, so payment happens to the TSU platforms. Like they will decide on which date payment has to be made. That reduced DSO, like a lot of the cost can be saved. Like they have for LCs and all, they can have a lot of turnaround time. They increase their turnaround time. In case of LCs, they have a lot of time lost throughout the process. These for the exporters, and of course the bigger bank and the BPO recipient bank, they have their own benefit in terms of reducing the operational cost. The know your customers, all these things actually are kind of automated through the BPO. So each time the KYC checks and all everything need not to be required if it's already a guideline laid within the trade finance on the TSU platform. For the recipient banks also, they can have a broadened finance services actually through the CF channel or through the other channel. Like this BPO is kind of undertaking for them, so that they can forward their finance facilities to the respective suppliers. And the operational cost, it actually reduces, because once the initial cost may be high in case they hire from a third party, or they have their own internal arrangement for the BPO for the TSU platform. But once it is being laid down, I think there are not much cost involved. Actually, it's more like a straight-through process and a fully automated scenario. So cost can be saved here as well. So these are the future opportunities for BPO. Like in case a buyer is really interested and they feel that this kind of features of the specific BPO framework helps them in their business, it's actually beneficial for both the buyers and suppliers point of view. I'll go to the next slide, which is about the challenges. This is about the opportunities. The challenges, as I already discussed, it was about the high chances for fraud or non-compliance, because it's a matchmaking process through the automation and through the electronic way of checking the document underlying agreements and for the information that they receive from supplier. So there is a chance of non-compliance of the regulatory guidelines, or maybe chances of fraud, maybe under invoicing, over invoicing, or any sort of discrepancies are possible in the actual document, which is not being shared by the supplier in the information they have shared to the TSU platform. There is a chance of gap. This is the main reason for which importers are actually coming out of this BPO framework, because they cannot actually fully believe this framework, because they are not dealing with the actual documents, but they are dealing with information which can be mutilated, or which can be misused by the supplier. So there are certain ways of having such kind of frauds, which actually discourages the importer sometimes to use the BPO platform. Also, it's actually having high accountability on terms of importer, because they are actually paying or giving the agreement for payment on a certain day without having the actual documents in their hand or in their banker side, rather than having the information, which is kind of a risk for them. So that's what the challenges we have to convince the importer for the BPO framework. It's more challenging for the importer side than the supplier side. For supplier side, it's also less convincing. There are some legal complications due to the rejection. In case the information is being rejected, there is no way to make it negotiate it further, because this is a electronic platform. It doesn't understand any such of negotiation. It just gives the pass or fail kind of a response. And also there is a legal complications arises when they have a specific rules for a country regulations or country compliances to be met, which sometimes BPO cannot achieve it through the information that they have. It's minimal, but still there are chances for have a legal complication. BPO oblige bank, they have a specific technical infrastructure, of course, for the TSU platform. TSU platform is a common platform between the both recipient and the buyer bank, obligor bank. But obligor bank has to have that everything in place so that they are giving the BPO assurance. So all the undertakings and everything which they have provided to the TSU has to be made as per the agreement. That is the more responsibility on the buyer side, that they have to convey those conditions and terms to the TSU framework, TSU platform in a meaningful way so that it makes sense. And for that, they need a specific technical infrastructure so that those sort of conditions and terms and everything can be sent and BPO can be issued so that the underlying agreements and terms and conditions can be sent to the TSU platform in a way that it can match those information and the terms and conditions meaningfully with the information provided by the supplier. So it's neatly a technical infrastructure, little bit higher side on the BPO obligor bank. High initial cost, as I already told you, and the less client acceptability rate. It's actually a challenge because buyers are actually not so convinced with this BPO framework. Over a period of time, the mindset is changing, but still there are lack of acceptance on the BPO framework due to this reason. From the BPO recipient bank, the challenges are this: the income is less because except the finances, all this document handling and document verification and negotiation, they actually charge confirmation. There are a lot of opportunities by the recipient bank which they did for the traditional product like LCs. Even for collections, they can analyze those bills, analyze those documents. Here, BPO doesn't give that kind of opportunity. It's just like a straightforward matchmaking, and then they have to pass the information. So the income is quite less for the BPO recipient bank, except the finance. But finance, it's not something very new to them. They already having finance for traditional products. So BPO is also adding the general horizon, but it's not something new for BPO. And of course, the high maintenance cost because they also have to maintain the BPO platform and they have to pay some subscription charges or they have to maintain some sort of a middle ground for the BPO application. So internally maintained applications between multiple banks. So they have a high maintenance cost for that as well. These are challenges for the BPO framework, which we have, which can be seen in the present world, and due to which BPO did not pick up as fast as it was expected initially. So the last point is the conclusion. So conclusion, actually, there are 3 points I have highlighted here. One is the economic shift. Economic shift in terms of if BPO being encouraged and being followed rigorously with proper maintenance of the data and the proper rules and conditions being met as far as your BPO standards are being have been mentioned there by ICC. I think it can reduce the turnaround time by a huge extent. Also minimize the any such operational error, and it can impact the economy in a way that the trade finance business it will become a very fast and cheap way to do the business. Trade finance payment settlement methods are actually complicated. They have a lot of conditions, lot of terms, and lot of time taken process. Human intervention, human error, everything was actually part of that process. But it can make it like a STP, like a straight through process or a fully automated process, where if proper care can be taken to the banker side, from the supplier or the buyer side, if they have provided the data to the best extent possible. I think this is one of the revolutionary product in the trade world because it can actually change the way the trade finance is doing business today. It takes months or maybe more than a month to complete a business cycle, whereas this particular way of having business can be completed in a week's time because it really transfers the data and the matching process happens can be happen in a span of an hour. And then promotion and education part of we need to understand this. Such as the business have come with some risk as well. It's not like free of risk. There are risks from the buyers and the supplier perspective as well. But we need to educate those clients so that they can understand and they can mitigate those risks. Taking insurance is required, taking the certification quality standards. So basically, where are the loopholes are existing today for BPO? Basically, client is not, our client is not 100%, happy with the way the business is being done through the information. The buyers, they always have the doubt on the quality, on the actual valuation of the goods, or maybe at some point of time they can be made under invoicing or over invoicing because we do not have such kind of mechanism under BPO to find out those kind of frauds. So we educate the client to take the measures like to take a proper insurance, or at times they have to have some certified authority to verify the quality of the goods, or they can have a third party provide services which can be part of the BPO as well as a part of the information to be shared to them, where they can verify those standards and standard of goods and the verification of the quality, everything through the BPO platform. Inclusive trade environment, yes, it includes the buyers and suppliers both to mitigate their risk. It includes inclusive high volume and high value transactions as well, because it doesn't do any differentiation between the transaction because it is the same laid down process being followed, and it is the electronic matching facility where they do the matching based on the exact data, nothing less, nothing more. So, I mean, trade finance can boost their business overall, include more the smaller buyers and smaller suppliers as well. In terms of if they follow BPO, it can save their time, and they can have a liquidity as well, because it is an irrevocable undertaking from the bank. It's having the valuation as same as LC, because if a certain amount of things, a certain amount of information being shared, they can receive the fund without any hassle. So these are the points we should think about while thinking about BPO. I mean, these are the points where we can improve, and we can think BPO can be a framework where it can be used by throughout the world, and then the buyers and suppliers both can be benefited out of this. So just to the last few points to touch around, like it still remains very new process, new framework, because it's just introduced just 10 years back, and it's expected to gradually, grow in a way that it can replace the existing traditional product. So looks like maybe once the post-COVID era, everything gets settled up, and then people will understand, the merits and demerits of BPO. It can capture some amount of the business, the traditional trade finance business done by letter of credit or collections or open account, because it's much faster than them, and it's actually having a lot of, good points in terms of there is no manual intervention. So I mean, they can do faster and much more cheaper manner as well. Protection from both the buyer and supplier side in terms of information being shared with them, and the information has to be made with the specific standards as far as the guidelines laid down by the ICC. So these are the conclusionary words from about the BPO framework. So in case you have any point, just let me know. In case any questions you have, just let me know.
Sandip, I have a couple of questions. So you said this BPO obligor bank and the recipient bank should be using the same platform,
Yes.
which is TSU, and SIFT is providing this platform. Are there any other vendors providing any platform for this BPO framework?
Initially, quite a few banks have started their own platforms between them. They kind of created a consortium between themselves, and they have started a common platform using the BPO, framework. But those frameworks are actually now they are non-existent actually. So now actually predominantly Swift PSU platforms are there who are actually doing the matchmaking for the information, and it's kind of very popular among the other few clients as well. So initially, quite a few banks actually, they have started their own BPO kind of a platform within themselves, and they try to do the business through that. But due to certain reason, it didn't pick up that much actually. So right now, I think predominantly it is the TSU platform by that Swift, which is giving that matchmaking between the respective parties, data and underlying agreements.
Okay, then I have a follow-up question. So
Mhm.
let's say the seller doesn't want to give the data to the BPO recipient bank, but
Mhm.
some other bank who is using the same platform like the obligor bank using. Is that facility available for the seller to provide the data to different bank other than the recipient bank?
See that specific bank who are actually on the seller side, if they have subscribed to a specific platform, and the same platform can be used by the other banks as well. Like you are saying that the obligor bank on the other on the same buyer or the other buyer, there is no problem as such. Like in case of one rejection, they can use the same set of data for another buyer, and they can sell it to them, like they try to sell it to them, but they have to have the same platform if the data, and they have to have an underlying agreement as well. Because see, I mean, I cannot just send the data to someone who don't have a business relationship with me. So the ultimate thing is that initially when we have a business between the buyer and seller, they have to have some laid down guidelines, like the underlying agreements basically. So how what kind of goods they are actually taking, and what type of specification for them, what type of documents they are actually looking for, and what are the amounts and everything. Like what are the inherent details for the trade finance business. They have to lay down that guidelines in terms of the agreement, and that agreement has to be the information of the agreement has to be shared with the TSU platform, so that once they receive the data from the exporter, it has to be matched with those information. So you are saying the data can be shared. Yes, data can be shared. The platform should be common. That is the second thing. And then they have to have the internal agreements also, like based on what the data can become. Otherwise, without just sending data doesn't suffice.
Okay, so in a nutshell, it will be always between two banks. No other banks can be involved.
No, can be a third bank, but see, a supplier can have multiple relationship with the multiple buyer, right? So they can supply the same product to the multiple buyer. So even in that case, one supplier, as I told you, TSU platform can have multiple set of records for the same buyer and supplier, like one buyer, multiple supplier, and one supplier, multiple buyer. They have those information with them, like what sort of transaction they are doing. And this party is sending those information, say one party, one set of information they are sending to this party, another party, another set of information they are sending using the same platform. There's no problem as such. But yeah, they have to have those underlying agreements to be there between those parties within the TSU platform.
Okay, understood. And you also mentioned there is a pre-shipment finance is possible. So the banks will
Yes.
provide the pre-shipment finance based on this BPO agreement.
Yes, exactly. The agreement
Okay.
is just like an underlying agreement, underlying undertaking by the obligor bank is actually giving assurance that if such and such things are being met, more like LC actually. LC, we
Okay.
have to have send the document to them. Yeah, there is no need of document. You can just send the information to them through the TSU platform. So the bank are taking risk based on those information, and then they are supplying those finances to them. So it's like more like you have a LC, and then based on the LC, if somebody wants to procure the raw materials, for that they need to have the pre-shipment finance. So based on the terms and conditions of the LC, availability of the LC with the respective banks, it can be provided. Same like here as well. It's not an LC, but it is a direct undertaking to the supplier that it will be provided if the terms and conditions are met. Also, bank can take own call whether it will be in the bank's line or the supplier, the customer's line. That is their take.
Thank you, Sandip.